The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
For over 95 years, we've set the bar. Power, we restored it. Protection, we reinvented it. Record yields, we redefined it. If there's one thing we know at FS, it's that just because something hasn't been done, doesn't mean it can't be done. We're never satisfied unless we take your farming operation to the next level. Run your equipment at peak efficiency and bust the bins this season. Visit fssystem.com.
Well, has the wheat market maybe found a bottom? We saw some pretty decent strength there on the day. Wednesday, soybeans as well on the back of declining crop condition ratings. Corn was quiet, but overall these markets held up pretty well in the face of some outside market pressures on Wednesday. Here to go through things and provide us with his analysis, we welcome back into the show Mike Zuzolo with Global Commodity Analytics. And Mike, good to talk with you. I hope you had a good holiday weekend, and I know you were busy at the Farm Progress Show while I was there for a short time, and so it's good to have you back on here this week, my friend.
Great to be back with you, Jesse. I appreciate it, and yeah, it's been nice to have a 3-day weekend, hoping the market sentiment would change. Oftentimes it can after a 3-day weekend. So maybe we built some bricks here and built some blocks to give us some support heading into that WASDE report on the 12th.
And that's a good point you make, and I think that's a great place for us to start. I mentioned there at the open, I wonder if the wheat markets maybe found a bit of a bottom here. It felt like possibly a little bit of short covering came in there on Wednesday from some fund traders and more. I mean, you look at the relationship between SRW futures and crude oil as well, some different things that you and I have talked about in the past. Let's start there. What's your take in this wheat market after Wednesday's action?
Yeah, we've talked a lot about how the wheat, the crude oil, the copper are key indicators when it comes to China, and that's no more clear than it is right now. It's never been more clear than it is right now. And you see in this crude oil chart versus the soft red wheat, the divergence in the price action, the trading of them going in opposite directions when they typically will run together. Why is that? Because they typically both run very opposite the US dollar. And so we've come upon a time when the US dollar and the crude oil are both going higher, while the wheat has not been able to follow that crude oil market. It's followed the dollar relationship instead. This can be explained by one simple feature, I think, Jesse, and that's China. The crude oil market has seen OPEC extend its production cuts through the end of December now, an extra 3 months, led by Saudi Arabia and led by Russia. That Russia angle is very important when it comes to the wheat now that we know that Russia's agriculture minister, speaking to Parliament just today, it was reported, said, we've stopped planting the new winter crops because we're running out of fuel. Well, I wonder what's going to happen to that poor man now that he said that in public with Russia's leader, because I'm quite confident Russia's leader did not want that to be known in the marketplace. But the OPEC cuts and the being extended are a almost sure sign that OPEC is worried about China just as much as everybody else is. And they kept their cuts in place because China's demand continues to be so weak. And so the dollar going higher because of the weaker China market and the dollar being bought against the yen, against the Chinese yuan, against the Brazilian real, that makes sense because of how weak China has led the other emerging markets in Japan into the doldrums. That they're even impacting Europe. They're impacting Germany, the number one country economically of Europe. So for a change, we're seeing fundamentals make sense in that the crude oil has gone up and made new 2023 highs while the wheat market has continued to go lower. I do think, as you alluded to, that dog will only hunt so long, and that if the crude oil stays strong, and now that we know what's going on with Russia's fuel situation and their harvest and their lack of being able to plant new crop wheat, I think between that and the drought here in the United States, and coupled with the fact that we've got the grain deal still MIA, everybody expected that to come back right after the holiday weekend. I am encouraged that the hard red wheat is finding some support off this. Now the missing link is that European futures market to come in after the September goes off the board on the 11th and really show itself as having bottomed as well.
Well, and I always appreciate the global perspective into these markets and those comments there with Russia, China, and more. I think that's a very good kind of backdrop to our discussion here today, Mike. So, as always, appreciate that. And this wheat trade, to your point, we've discussed it being kind of the leader to the upside and crude as well. And, crude, I mean, can we sustain $90 a barrel crude oil? I think that's going to be a big canary in the coal mine here moving forward, Mike.
Yeah, it really presents a dilemma for me because we broke through a major resistance level in diesel prices, both U.S. diesel and Midwest diesel, probably 2.5 weeks ago. And I put the clients and subscribers on alert that if we closed above that, we'd need to get some fall needs locked in. Well, that price got away from me. And now with OPEC now cutting and extending their cuts, and the fact that we're seeing the market find a lot more diesel demand probably in the United States because people are now talking about third quarter growth here in the United States being almost 6%, almost double of what we've been used to for a third quarter. Some of the economic data is pointing that way, led by the consumers still. And so I really do think we are still heading into a fourth quarter recession. But what we just got done doing as far as economic strength could keep spilling into the energy complex. So right now I'm sticking with hand-to-mouth buying on the diesel for the fall because it's already gotten to an elevated point. But if I would see, a substantial pullback, I'd probably jump onto it.
Mike, let's talk. You and I like to look at the Bloomberg grain index, the commodity index, quite a bit here and get an update on this. And it's been a couple weeks since we've discussed this chart. So walk us through what you're seeing here. I think this can help parlay us more into a corn soybean discussion. But what's the latest you see on this chart, Mike?
No, you read my mind. With what we're seeing with an early harvest coming in the central corn belt and western corn belt and some key states, and what we'll look at here in a little bit with the Iowa conditions, I think this early harvest mindset works into the idea that the technicals are forming this pennant right here, right now, the month of September, and we are signaling on the stochastics at the bottom of the chart, the green and the red lines, they are crossing, they are suggesting the first buy signal in that Bloomberg grain commodity index since 2020. As you say, something we've been watching for many, many months, and it's given some false breakouts before the triangle wedge appeared, and I had to redraw the wedge once. Now we're back to a pennant. Makes sense, and I think this lines up well with the WASDE report, lines up well with the grain stocks report at the end of the month, that we're going to break one way or the other in all likelihood, from my opinion and everything I look at.
Well, thinking about that report coming up here, just with the way this is setting up, it feels like it could bring us some market moving surprises, and that maybe some fund managers, some of these big, firms are already squaring up some positions ahead of that WASDE report because they're trying to anticipate what USDA could say. And I'm getting the prevailing gut feeling here that we could get some interesting numbers coming up on the 12th, Mike.
You're right. I feel like September is going to be a really extraordinary month. I don't know why, but I can see some of the potential in terms of the WASDE report and the domestic supply demand, in terms of China and their economic data being so bad. I think that the Chinese leader is going to have to move. I think he's a pragmatist first and foremost, Jesse, and I think with him hooking his train and his train car to the Russian war, that's not gone so well for him at this point. I think that the economy, especially though, will make him have to move, or should make him have to move in the month of September. We're already hearing countries like Japan and Brazil say that they are going to defend, and Europe, the euro currency, defend their currencies. They've gotten too weak. They can't take this kind of inflationary pressure because of the dollar strength. I think that might be a signal for some currency intervention as well. But yeah, when it comes to the supply demand, that supply, you and I talked about this probably a couple weeks ago going into the Pro Farmer Crop Tour. What was the maturity of that crop in corn? The trade had already kind of signed off on the corn crop being made. They had to reevaluate that, and then they really looked at the soybeans and said, wow, this maturity is just really, really low in terms of some of these states, and a lot of damage could be done to the yield potential if we were dry for 20 days. Well, here we are, 2 weeks now after going on 2 weeks after the crop tour. We're essentially 30 days without moisture in a lot of regions, and so we really do have a wide open yield in the soybeans, if you ask me, in some of these major states.
We are having a conversation today with Mike Zuzolo from Global Commodity Analytics. And Mike, speaking of major states, let's focus in on Iowa. I think you read my mind today here as we look at this discussion, because I've heard a lot of anecdotes from friends and family in parts of Iowa and other folks, agronomists and more, just how rough some of this crop is looking in parts of the state. And Iowa, of course, is one of our top major corn, soybean producing states here in the U.S. So, and we look at declining crop conditions here, and I think this is going to be very interesting to watch just how Iowa finishes out the season.
Yeah, I agree. The term dying down instead of drying down, I took from an agriculture website. I think it was earlier this week or late last week. So that's not my own, but I think it really encapsulates what we're seeing on the sharp. The first thing to notice is the red line in the good to excellent conditions. Notice the sharp drop in the second half of August. Very rare to see that. The last time we saw that was back in 2020, and we're heading down into that level of 2020 conditions. Probably even more important, though, is where we're at in the dough stage and the dent stage. I was struck that the dough stage, which is the purple line at the bottom third, near 100%, dent stage, fast approaching 80%. Look at how far advanced that is compared to both last year and the 5-year average. And I think that says a lot about Iowa, that we've got some significant issues. And we've got significant issues in Iowa, Illinois, and Minnesota. And you've got to have those 3 states, I think, running on all 8 cylinders when you have such a big acreage base to get anything close to a 175 yield. And one of the private companies that has been out a long, long time, I really respect, came out with a 171.5 number today. And I think that could be really right on the money. I'm at currently still 173-ish, essentially last year's number, but I'll be taking mine down next week, probably close to that 172, maybe even below 172 at this point, depending on how some of these satellite images and models and what clients tell me, as some of them will actually get in the fields early next week.
Well, and speaking of some of those satellite images and models, another look here at Iowa, just looking at the vegetative health versus a year ago. And you can obviously see on our video feed just a lot of changes in the colors there, a lot less you got blues one year versus last year versus not so much this year, Mike.
Yeah, this is a really neat chart because this is as of now on week 35 versus week 35 exactly a year ago on September 2nd. And you can see the depth in this crop in the central and eastern and northeastern parts of Iowa. And I mean, it is stark. And so when you see these, and I know you saw these on your road trip last week to the Farm Progress shows, I did a lot of ears dropping. That just goes back to that early harvest and what kind of grain fill are we going to have, especially, and what kind of tip back are we going to have. I've been receiving pictures of crop scouts and farmer clients walking their fields, southern half of Illinois. One client told me in Richland County, he's been dealing with 220 bushel yields the last couple of years, or 200 bushel plus on average. He's looking at 160 top end this year, and that's going to bring down the state average if he's not an anomaly, Jesse. And I think this is where those 3 states, Illinois, Iowa, and Minnesota, really curious to see what USDA gives us on September 12th, because I think that could shave a couple bushels, maybe more, off that yield. And that would be common to what they did last year at this time, going down. By the time the October report rolled around, they had gone from 175 down to about 172.
I don't want to talk all doom and gloom here when it comes to corn and soybeans, Mike. I feel like there's still some opportunity out here if folks have an okay idea of what they have out there in the field, if they're kind of reevaluating their marketing strategy heading into harvest. I'm hearing a lot of chatter as well that, we could be selling beans off the combine and storing corn. So, I mean, there's that out there too. Just feels like still, though, not to talk all doom and gloom, but there is some opportunity out there right now.
Yeah, and the doom and gloom comes from the crop production side. But I would say, in linking to what you just said, Jesse, that the trade's gotten ahead of themselves by assuming this crop's made, and the basis and the futures have gone down together, especially for new crop. That's not normal when it comes to before you get into harvest. And so I think the producer may be losing bushels in the field, but he could, I think, gain quite a bit back in the cash basis and or futures, where they both have to move up together if the crop is short. And I think that's especially the case in the soybeans. But I'm very much in your camp from a standpoint of soybeans. We've been able to get back to above 1360 in September beans. That's a must-have. We're getting ready to see that contract expire. I really want to see the September take over and become premium again in the November, because then you're in a structural market shift again where the trade's saying, give me your beans right off the combine, don't store them. And for my part, that's exactly what I'll recommend. I'll let those beans go unless the basis hangs really, really low. Still got clients dealing with $1 under basis right now in soybeans. I can't see that still being the case in 30 days if we clip these yields like I think we may.
Mike, let's talk livestock. I want to make sure we have a little bit of time there on today's program. Cattle had a really solid day Wednesday overall. I know you have some new analysis just on the beef side that I'll pull this up on the video screen as well. We could talk about this, but overall, pretty solid day in cattle on Wednesday, Mike.
A really nice market we have right now, and we're in the month of September. I feel like this is the month to really take the reins and see how bullish the bull can be. The buying dip mentality continues by the funds. We do have the stock market that's just had a rally. The crude oils had this rally. I think the cattle are tapping into that. But I'm trying to look around the corner a little bit between the drought premium that we're putting in, the export premium we're probably putting in at this point. Australia's equivalent of USDA, ABARES, came out with a great report on the holiday on Monday this week and signaled another red flag when it comes to the rising world beef supply. Both Australia and the United States are drawing down their production because their herd rebuilding cycle has not started yet because of drought. So in the case of Australia, we're going to see a lot bigger supply come in the fourth quarter and first quarter of 2024. And what they're suggesting is that's almost all going to go to the United States in the form of increased imports, and Japan, but especially the United States. And so I really liked how they encapsulated the world beef production here, the supply versus the exports. And it's something that I think the USDA could do a better job on when it comes to looking at global pork and global beef production, supply, demand statistics. So if you get more bulled up in the cattle, that's fine, but realize that we're hitting cattle prices. We're back close to that 190 level in December fat cattle. K-State has us over $200 a head profitability right now, Jesse. You can count on one or two hands how many times you've been that profitable over the last 15, 20 years. You're essentially in the live cattle market for the fourth quarter prices because of low feed costs. You're essentially dealing with $8 or $8.50 corn right now. So respect the profitability. Forget how high is. Get some floors locked in before the end of the month.
And I want to throw this in there too, and I think this can rope in the hog discussion as well a little bit here, but that BLT seasonal, you like to talk about that. I mean, that's over. Labor Day's gone, and, we're kind of reassessing some of that retail demand that we saw for beef, pork, poultry, et cetera. I got to kind of throw that into this discussion as well, just looking at some of that domestic demand now that we're entering into fall in the fourth quarter, Mike.
Yeah, excellent point. And I had a great conversation on that line with a Nebraska cattleman rancher said to me, well, what about the retention? We're going to even tighten up these numbers even more. And I said, yes, but we did that in 2015 as well. We started to retain females in 2015, but the price just kept going down. Don't forget how anticipatory these markets can be and how the demand lag that we have in the meats especially are very significant. They're a lot like a Federal Reserve rate hike. It takes several months to cut that demand, but that demand cut and that rationing does last for some time. So this is why Australia is so important. If Australia didn't have a big crop, a big beef situation, and Brazil wasn't in the export market, I'd be singing a different song right now.
Mike, great analysis as always. Anything final you want to share or reiterate before we let you go today?
I just go back to the September chart, the September time frame in that Bloomberg Grain Commodity Index. The WASDE report, if we continue to go higher now, needs to feed the bull as we go into the end of September crop stocks report. So we may need to get some hedges on before that or in between those two reports, Jesse. That's kind of the dance we're going to have to do here. But cattle and beans are very similar in my mindset right now. Lock the floors in, the huge profitability in many cases if you don't have a bad basis and you have a good crop being grown.
Could be a September to remember. I think I'm going to start using that line here as we
That's a
go over
great
the
one.
next couple of weeks. Mike, if folks want to see your analysis, reach out to you with questions, comments, and more, I know they could do that very easily. How can they get a hold of you, Mike?
Yeah, sign up for a 2-week free trial. Mention Jesse's program, and I'll send you that newsletter we were talking about free of charge. And hopefully you'll like what we do. And after 2 weeks, I'll get in touch with you at globalcomresearch.com. You can find a lot of information about us and also where to sign up.
Globalcom with 2 M's, research.com. With that, Mike Zuzolo, Global Commodity Analytics. Always great to chat with you, my friend. Have an awesome week. We'll talk to you next week.
You too, Jesse. Take care.
And that's going to do it for the show today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.